Happy New Year! 2020 is over. If I were to summarize this year in one word, it was different. As a stock market investor, it is time to be grateful and hopeful. A lot of things went wrong in 2020. However, the stock market ended at a record high. As an investor, I'm grateful. Hopefully, 2021 will bring sanity back in our lives and stock market will continue to showcase a broader rally. Let's set some expectations for 2021 and explore some investment opportunities. What's happening, everyone? Welcome to Think Finance. My name is Raj, and on this channel, I talk about personal finance, investment ideas, money management tips, and everything money. It's been epic since the pandemic hit global economies. Hopefully, in 2021, the disease will be behind us and jobs, businesses, and economies will stabilize. In this video, I will share my portfolio performance, 2021 outlook, and my investment strategy and areas where I'm invested. If you stayed with stocks, you did good. 2020 was a record year for stocks, with S&P ending the year up 16% and Nasdaq was up a whopping 44%. We were at all-time highs when the pandemic wrecked global markets in February and March. The market eventually bottomed on March 23rd, giving up more than 30%. US was in a bear market with major job losses and significant drop in business activity and GDP. The National Bureau of Economic Research, or NBER, officially called a recession in June. While all of this was happening, our buddies at the Fed were pushing a lot of liquidity in the market. The $2 trillion stimulus package brought some relief, and historic low interest rates made borrowing cheap. The Fed was playing the part in jump-starting the economy. And it helped, to some extent. The market ended the year at all-time highs with the fastest recovery in history. Jobs are trickling back, vaccines are out there, and it looks like we are on our way to a much healthier 2021. Here is a quick update on how I did as an investor. The results are for last 15 months, starting October 2019. This is when I started building my portfolio, and it just makes sense to talk results since inception. Starting next year, I'll do a more yearly update. If you follow this channel, you know I am building my long-term portfolio in M1 Finance. I also have a stash in Robinhood, which is used strictly for trading options. This is a big part of my overall strategy. Gains in Robinhood get reinvested into M1 Finance, which drastically amplifies my overall return. In the last 15 months, M1 Finance returned 37%. Trading options in Robinhood locked in 646% in net profits. Robinhood gains, which was $168K at the end of 2020, was reinvested into M1 Finance. So, from a portfolio perspective, I made 197% on my investments. In a year where there was so much going on, as an investor, this ended up being a banner year for me. Leverage ETFs are a big part of my overall strategy, and these make a major chunk of my portfolio. For 2021, I opened new positions in ARK ETFs. This is one of my big bets moving forward. Of course, there are a bunch of other areas including big tech, cloud, dividend, and green stocks. We'll talk more about these in a bit. The question is, what can we expect in 2021? Here is the short answer. There are reasons to stay bullish for 2021. But given the recent rally in stocks, I don't think you need to be a genius to make a statement. Be prepared for a pullback. Having said that, as a long-term investor, everything is noise and you should continue investing consistently on a monthly or a weekly basis and of course, automate your investing. Unless you have a crystal ball, timing the market or predicting the future is humanly not possible. By the way, if you're not investing, do it now. Make it a goal for 2021. I use M1 Finance and would strongly recommend. According to a recent survey conducted by Yahoo Finance, most strategists are bullish for the year with an average for S&P at 4150, 11% increase from 2020 close. Optimism is based on a number of assumptions. We will have an accommodating Fed that will continue to ease monetary policy. Vaccines will work and will be distributed successfully. We will have a divided government. The new round of stimulus will offer some relief and business activities will return as stay-at-home restrictions start to ease with the vaccine rollout. For the most part, I agree. We are in a new bull market and history suggests most gains come in first 2 years of the new bull market. I continue to stay bullish but cautious. We just experienced a massive rally in 2020. I think we will see some form of correction in the first half of the year, which will be healthy and set us up nicely for the rest of the year. Here is my take on 2021. For the most part, it's business as usual. However, I am making a few changes to my overall investment strategy. First, I am pausing my monthly contribution and raising my cash balance. Why? For 3 reasons. Number 1, I invested a good chunk of new money when markets dropped big. Number 2, those investments paid off. My portfolio is up huge and now I'm way ahead in terms of my financial goals. Yes, there is something like over-investing or over-saving. Number 3, I want to stay cautious at least in the first half of the year and be prepared for a dip, if we have one. I'm a strong believer in dollar cost averaging and having some cash on the sideline helps, especially when I'm invested in leveraged ETFs. Second, my allocation has changed a bit since I started my portfolio. The overall theme is still a balanced approach, but positions have changed a bit. I'm targeting 30% into leveraged ETFs, 20% into ARK ETFs, and 50% in dividend and growth stocks. For leverage ETFs, I'm still sticking with the ones I like and have recommended in my other videos. TQQ, TECL, and SOXL did really well for my portfolio in 2020. UPRO and UDOV should do well since S&P and Dove include many reopening plays. If you follow this channel, you know I have a strategy to invest in leverage ETFs. Buy more on dips and rebalance on parabolic moves. Watch my leverage ETF playlist for more information. Then I have 20% in 3 ARK ETFs, ARK K, ARK G, and ARK F to get innovation, genomics, and fintech exposure. I think these will continue to see growth in the next 3 to 5 years. More on ARK in this video. Finally, 50% of my portfolio is in dividend and growth stocks. Here is a quick summary of my holdings. Let's start with Big Tech or FANG. Of course, every portfolio needs to own Apple, Microsoft, Google, Amazon, Facebook, and Netflix. I'll also include Adobe in this category. These, along with other tech names, might see some pressure as investors focus more on reopening trades. You will hear analysts talk about growth versus value and how value is where you want to be in 2021. NASDAQ was up 44%. Of course, investors are going to take some money off the table and rotate into other sectors. I believe these are leaders in what they do and any dip is a buying opportunity. Similar to Big Tech, cloud names might see some short-term pressure. Unlike Big Tech, I do think there is some froth which should clear in the short to medium term, but the long-term story for cloud remains positive. 2020 made companies realize the importance of cloud, cybersecurity, digital contracts, and just work from anywhere culture. Moving forward, working remotely will be part of our work culture. I own names that I believe should thrive with or without a pandemic. Stick with quality as opposed to quantity in this space. Under Biden, US-China relationship is expected to improve, which should help semis. NVIDIA, AMD, Lam Research, Taiwan Semi, Broadcom, and Leverage ETF SOXL are my plays here. Anything green, EV, and renewable energy should prosper under Biden. Names like Tesla, Plug Power, and NextEra Energy should be safe bets. I also have NIO in my IRA, which I do expect to grow exponentially in the next 3 to 5 years. With the rise of Bitcoin, digital wallets, and blockchain, you need to have exposure to fintech. I have MasterCard, Visa, PayPal, Square, and ARK ETF, ARKF, which focuses on fintech. And yes, I am into Bitcoin. Healthcare was one of the best performing sectors in 2020. I expect 2021 to be the same. I have J&J, Abbott Labs, United Health, and ARK ETF, ARKG, that focuses on genomics. I do have some exposure to beaten down sectors or the so-called reopening plays. Delta for airlines, McDonald's and Chipotle for restaurants, JP Morgan for banks, and Disney. These are expected to do well in 2021. Some other names like, let's just call it retail, defensive, or consumer. Can't go wrong names like Home Depot, Costco, Procter & Gamble, Sherwin-Williams, and Nike. I also have some exposure to international growth names like Sea and Alibaba. I know Alibaba is getting no love these days, but got to focus on the long-term price. That is my entire portfolio. Link in the description if you want to open a new M1 Finance account or follow my portfolio. Hopefully, 2021 won't bring surprises that 2020 did. No matter what happens, always stay focused on the long-term price as opposed to short-term noise. Let me know in the comments if there are opportunities I should tap into that you believe is expected to grow in the next 3 to 5 years. Always looking to collaborate and explore new ideas. Hope you have a terrific 2021. Thanks for tuning in. Like, subscribe. Until next time, peace.